Spirent Communications share price decline and in-depth examination. Highlight of key points. Spirent Communications, a British telecoms testing services provider, has issued a warning about a potential decrease in their annual profit. Following this announcement, the company's shares experienced a sharp decline, dropping by as much as 33%, which is their lowest point since February 2018. This significant decline in profit is attributed to the challenging conditions in the telecommunications market and the reduced spending by China. In addition to this, Spirent has projected a 20% decrease in their annual revenue. This projection is supported by the notable decline in demand for high-speed Ethernet observed in the third quarter. The company had anticipated an increase in orders from China. However, this increase did not materialize, primarily due to the Chinese government's decision to reduce its spending and the overall deteriorating economic landscape in China. Spirent's major customers have decided to postpone their spending and technological investments. This has prompted the company to revise its near-term outlook. The company's CEO, Eric Updyke, has mentioned that Spirent's performance in the third quarter did not meet the company's expectations. It's important to note that China, which accounted for approximately 18% of Spirent's revenue in 2022, represents a significant portion of the revenue that the company no longer expects to receive in this fiscal year. Despite these challenges in China, Spirent has been actively exploring new market opportunities in the Asia-Pacific region. Analysts at Jefferies are anticipating a recovery in orders and sales for Spirent, but the timing of this recovery remains uncertain. More detail. Spirent Communications, a renowned British telecoms testing services provider, is currently facing a significant challenge with its share prices plummeting. This decline was triggered by the company's recent warning about a potential decrease in their annual profit. This announcement led to a sharp decline in investor confidence, resulting in a 33% drop in share prices. This marks the company's lowest share price since February 2018. The telecommunications market is currently facing a challenging environment. Spirent's revenue for the first 9 months is expected to decrease by roughly 20%. This expected decrease aligns with the reduction observed in the first half of the year, and this trend is expected to continue for the remainder of the financial year. The company had previously anticipated a surge in orders from China. However, this surge did not materialize. The demand for high-speed Ethernet was particularly affected in the third quarter. The Chinese government's decision to reduce its spending, combined with the deteriorating economic landscape in China, has directly impacted Spirent's revenue projections. The company has stated that these factors were significant in their decision to revise their outlook. Furthermore, Spirent's major clients have been hesitant to invest in new technologies and spend, leading the company to adjust its near-term projections. The company's CEO, Eric Updyke, expressed his disappointment with Spirent's third-quarter performance, which did not meet their expectations. Despite the challenges faced in the Chinese market, Spirent has been proactive in seeking new market opportunities, especially in the Asia-Pacific region. This strategy aims to mitigate the turbulence they have experienced in China. Analysts from Jefferies remain optimistic about Spirent's future. They expect a recovery in orders and sales, although the exact timing of this recovery remains uncertain. Spirent remains confident in the potential of 5G as a long-term growth driver. They are anticipating an acceleration in 2024, especially from enterprises focusing on private 5G.